we are Group 6. Our topic is medical expense insurance and disability income insurance. Here is the list of our group members. So let's start. This is our content. Each of the 6 topics will be presented by 6 different members. First is medical expense insurance. 我是金融三林子君。Medical expense insurance is a policy covering healthcare that includes but may not be limited to prescription drugs, medical consultations, hospitalization, and surgery. In the past, the patient needed to be hospitalized to receive a claim. But now, with the advancement of medical techniques, outpatient surgery has been added to benefit items, so patients don't have to be hospitalized to receive claim. So why should we buy medical expense insurance? After the modification of second generation NHI, many treatment items will not be covered, so there will be more self-pay items. If people do not have medical expense insurance, their financial burden will become heavier. There are some common types of medical expense insurance. Daily benefit medical insurance, pay-as-you-go medical insurance, severe illness insurance, cancer insurance, and others. Let's start with daily benefit medical insurance and pay-as-you-go medical insurance. Daily benefit medical insurance claim is based on a single daily fixed amount and actual hospitalization days. And pay-as-you-go medical insurance is actual medical expenses incurred during hospitalization or outpatient treatment. The main difference between these two insurances lies in out-of-pocket expense and incidental expense. In fact, these two expenses usually account for more than half of the medical expense, but only covered by pay-as-you-go medical insurance. So as fewer people are being hospitalized, and daily benefit medical insurance doesn't cover out-of-pocket expense and incidental expense, pay-as-you-go medical insurance might be a better choice. Next is severe illness insurance and cancer insurance. Severe illness insurance is based on severe illness card, and cancer insurance is based on certificate of diagnosis. Severe illness insurance typically provides lump sum payment, whereas cancer insurance offers both lump sum payment and staged payment based on cancer's severity and treatment stages. Severe illness insurance has a good advantage is it covers a lot of disease, but that doesn't mean cancer insurance is not good. It can be more detailed based on insured person's condition. Next.
And I'm going to talk about disability income insurance. So what is disability? Disability refers to a condition where an individual loses the ability to work or carry out daily activities due to illness or accidental injury. For the disability insurance, it's a form of coverage designed to mitigate the financial risk associated with the loss of work or life capabilities resulting from the illness or accidental injury. Okay, next we'll move on to the coverage scope. The coverage includes the lump sum disability insurance benefit and the ongoing disability assistance payments. Disability insurance products are generally designed as lump sum payouts, primarily intended to cover the high medical expenses incurred at the time of disability. While for the disability assistance insurance similarly covers expenses following a disability, but it places a great emphasis on long-term caregiving costs. As a result, disability assistance insurance is structured to provide monthly or quarterly payments. Okay, let's take a look at the claim settlement. The claim process for the disability insurance benefit, which is the lump sum payment, and disability assistance benefit, which is an ongoing periodic payment, are both based on the disability severity table, which consists of 11 levels, ranging from 1 to 11, as the chart presented here. Also, it's crucial to note that the policies have waiting periods, or you can say elimination period, before you're able to receive any benefit payments. This refers to the amount of time or number of days that you are disabled before benefits kick in. The most common period is 90 days. The shorter the waiting period, the more expensive the premium. Next, we'll be talking about the premiums. So premiums are based on a series of factors. If you work in a field that has a higher risk of injury, your premiums will be higher. Also, the amount of income you receive is also factored into how much you pay for coverage. The more you earn, the higher your premiums. And of course, age and occupation also affects. So lastly, I would like to end my part by drawing a small comparison between disability insurance and long-term care insurance. Because I found these two insurance share some similarities, and both types of insurance are primarily designed for long-term care. So first, for I've just mentioned, disability insurance is the compensation for the loss of earning ability due to illness or accident. As long as it meets the criteria, the claim can be initiated. So the coverage scope is considered more extensive. While for the long-term care insurance, it's a compensation for insured who requires long-term care due to physical or cognitive impairments, such as eating disorder or difficulty with toilet. And then when it comes to the criteria of the approval of the claim, disability insurance is based on the disability grade table, while long-term care insurance, on the other hand, is divided into physiological and cognitive impairments, and they are based on Barthel index and CDR index, respectively. However, it's important to note that once the patient achieves improvement in their physical condition through long-term treatment, the long-term care insurance benefits will cease. Lastly, disability insurance only requires certification by a doctor and does not need to reassess annually. In contrast, long-term care insurance requires an annual reassessment at the hospital to determine eligibility for insurance benefit payouts, making its scope of recognition more limited. So no matter which of them above, the younger you apply for insurance, the relatively cheaper the premiums. It also helps avoid the dilemma of being unable to get insured due to poor health conditions. So I hand my mic to my teammate.
大家好，我是金融山陈博彦。So I will talk about the consideration between these two insurance. Okay, first we talk about the medical expense insurance. The first consideration is coverage scope. Understand the coverage provided by insurance plan, including medical expense, hospitalization costs, surgery costs, and etc. Okay, the next one is deductibles. Check the deductibles in the insurance plan, which is the amount you need to pay out of pocket before the insurance company begins covering a portion of medical expenses. Okay, the next one is co-payments and co-insurance. Understand co-payments and co-insurance representing the portion of actual medical costs you are responsible for paying. The next one is premiums. Understand the monthly premiums you need to pay, ensuring they fall within your budget. Okay, the next one is additional benefits and riders. Check for additional benefits or riders such as a vision and a dental care, mental health service, etc. Okay, the last one is the reputation of the insurance company. Choose an insurance company with a good reputation to ensure smooth claims processing when needed. Okay, the next one is disability income insurance consideration. Okay, the first consideration is occupation and job characteristic. Certain occupation may involve higher risk of affecting premiums and insurance inligability. Individuals in high-risk professions, for example, firefighters and policemen, may require more comprehensive disability insurance. The next one is income level. Ensure that the disability insurance benefit amount is sufficient to cover daily living expense. Typically, insurance companies recommend the benefit amount to be a certain percentage of your regular income. The next one is insurance types. The STD and LTD refers to short-term disability insurance and long-term disability insurance. These two have different advantages and features. Consider your needs and decide whether one or both are necessary. Okay, the next one is in the elimination period. The elimination period refers to the time between the occurrence of disability and the insurance company starting to pay the benefit. A shorter elimination period usually leads to higher premiums but also means quicker access to benefits. The next one is definition of disability. Different policies may use very definition of disability, such as own occupation or any occupation. Understanding the policy definition of disability is crucial to determine when benefits can be obtained. Let's read one premiums, additional benefits, and riders. Reputation of the insurance company is the same as a medical expense insurance. So I will take it to the next person.
And I'm going to talk about the comparison between these two insurance. First, purpose and cover scope. Medical expense insurance is all about covering your bills when you're in hospital. It covers a range of costs like ward fee, the cost of surgery itself, and all the other expenses during your stay. It's basically about taking care of your huge bills so you can focus on getting better. On the other hand, disability income insurance provides financial support when illness or accidents keep you from working. You use lump sum payment or regular allowance to ensure you have a steady flow of income, supporting your day-to-day life even when you can't work, and you can use the benefit for anything you need. Moving on to eligible for benefit. Medical expense insurance is based on hospitalization, but with medical technology getting better, outpatient surgery is now often included, which means even if you don't stay overnight in a hospital, your surgery still might be covered. However, there are some exclusions. For example, if you are involved in criminal activities or if there is an intentional action, the insurance won't cover you. The same goes for cosmetic surgeries, unless it's medically necessary. And here's an important one. If you have cancer and require regular target drugs, but you're not staying in hospital, the policy will not cover your treatment. You should consider getting specific cancer insurance. Shifting to disability income insurance, which is based on disability grade table, is a way to measure how your working ability is affected. And there's a provision. Before they start paying out, they require you to wait a bit after disability diagnosis. It's called a survival period. And here are some exclusions too. How the payment work. About medical expense insurance, the first one is coercional payment, which is paid a set amount, regardless what you actually spend. The other is pay as you go. You spend on your medical bills, send the receipts, and you will receive compensation up to a certain limit. It's based on what you actually spend. And as I mentioned before, disability income insurance has a lump sum payment and regular payment. Next one is suitability. Medical expense insurance is ideal for people who need direct payment, which is designed for specific medical events. The key here is that the benefits are used solely for medical cost. However, disability income insurance is like your income replacement, providing support if an illness or accidents keep you from working. And the benefits are quite flexible. You can use them to cover all your personal expenses, not just medical ones. Both types of insurance have an important role in planning for unexpected life events. Next one, Adam 来。
我是金融商的赖世宝。
And I'm gonna introduce a case in our lives. I'll specifically look at Medicare, a federal health insurance program in the United States, and a plan provided by United Healthcare. Let's start with Medicare. It's not just a program, it's a lifeline for many. Medicare is a federal health insurance program for those 65 and older. It also extends its coverage to younger individuals with disability. And what makes Medicare flexible is that it's divided into different parts, Part A, B, C, and D. Part A covers inpatient hospital stays, skilled nursing, hospice care, and some home health care. It lays the foundation for essential hospital-related expenses. Part B covers outpatient care, doctor visit, preventive services, and some home health care. This is where we get the benefits of routine checkups and necessary medical service outside the hospital setting. Part C is like the all-in-one package. It combines the benefits of Part A and Part B, and sometimes even includes Part D, all offered by private insurance companies. It's an alternative that brings together various aspects of healthcare coverage. Finally, Part D focuses on prescription drug coverage. This part addresses the crucial needs for medications, providing coverage through private insurance plans. It ensures that individuals have access to prescription drugs they require for their well-being. Now, let's focus on specific plan offered by United Healthcare, Medicare Plan K. This plan comes with a set of features tailored to provide effective healthcare coverage. For doctor visits, after meeting the $226 annual Part B deductible, the plan covers 90%, and individuals are responsible for 10% co-insurance. It shares the cost after the deductible is met. Inpatient hospital care during the first 90 days of a benefit period comes with a fixed cost of $800. It's like having a predictable entry fee for the initial part of the hospital stay, ensuring the financial clarity. Also, its out-of-pocket maximum is capped at $6,940 for the year. Once this limit is reached, the plan covers additional costs. It provides a safety net, limiting the financial burden on the individuals. Importantly, individuals can see any doctor who accepts Medicare patients, providing for flexibility in healthcare choices. Referral to a specialist is not required, simplifying access to specialized care. In addition, the plan goes beyond basic coverage by offering wellness extras like a gym membership and 24/7 nurse line. In this case, we can find that Medicare does not only provide a single medical insurance for people, but it allows people to decide what kind of insurance they should have based on their financial and health conditions. Whether you are an elderly person or a young person who is disabled due to an accident, you can find a variety of insurance that meets your needs.
我是金融三领域的 and now I'm going to talk about the conclusion. So about medical expense insurance, everyone should have it, regardless of how healthy they think they are, because there might come a day when they face a serious illness or injury, and they'll need to foot a considerable medical bill out of their own pocket. For short-term hospitalization or high medical expenses, pay-as-you-go medical insurance is suitable. You pay, then the insurance company reimburses. If you anticipate long-term hospitalization with relatively low medical cost, especially if you need to stay in the hospital for an extended period and hire caregivers, then daily benefit medical insurance makes more sense. Several illness insurance covers a variety of disease, including cancer, but typically excludes coverage for early stages. Some cancer insurance plans provide compensation for complications arising from the illness. About disability income insurance, everyone should also have it, especially those in high risk occupations, as disability resulting from illness isn't covered by accident insurance. The cost of disability insurance increases with risk and age, and individuals with high risk may even face the possibility of being denied coverage. So, about these two types of insurance we've discussed is to provide financial support in case of accident, helping to sustain life during challenging times. Of course, the best scenario is to avoid accident altogether. And this is our report. Thank you.